Most of my money I have right now is for college tuition next year, so I don't really want to take a gamble on a huge internet stock.
Finance major and retail investor Nick Gilbert doesn't buy into the latest round of internet IPOs.
I just think there's too much risk there and a lot of overvaluation.
It shoots straight up, and then it just falls, and I probably will own it.
His worries might be warranted after internet stocks crashed in the late 1990s. However, one company might start blowing another bubble out of proportion.
It'll be interesting to see what happens when Facebook finally actually goes public, but that one I suspect will have a lot of people chasing it just because of the huge number of people that they have as members.
Facebook is set for a possible $100 billion valuation when it goes public. But how much room for caution does that leave investors looking into the social media giant?
When you see things like that happen, you say that's just out of whack with reality. I mean, there are pharmaceutical companies with drugs that can cure horrible diseases for people that we don't value that highly.
Just because you use the application doesn't mean that you understand what the company actually does or how it makes money.
Despite these concerns, some analysts don't believe a second internet bubble would be nearly as bad as the first.
Investors generally have a greater degree of caution in pricing securities. So if they are overpriced, they're probably not as overpriced as something that we saw in the earlier market.
Yet Nick is still prepared for the worst.
What I'm doing now is just trying to hedge myself and have enough things that I perceive as safe that another internet bubble wouldn't basically screw me over completely.
Reporting from the internet, I'm Blake Wilson.